When it comes to the commodity markets, there are a lot of acronyms and entities involved. On today's market segment, we're going to go back to the basics. Jeff Peterson is the president of Heartland Farm Partners. He first describes the role and the purpose of the Chicago Board of Trade.
It serves such an important purpose. It gives that foundation, that price that we all link back to. And if you think about the bigger purpose of the Chicago Board of Trade, really, one is price discovery. And that's changed a little bit over time. You go way back to when we had the pit, and it doesn't seem like that long ago, but it's been a while ago, where you had buyers and sellers come together in physical location. And then, as we'd expect with the advent of the internet and more electronic trade, then that went away, at least on the future side, and actually that buying and selling happens over the internet now and matching up of bids, just like you see on the stock market. So we determine what is the fair value of grain all across the world. And then in addition to that, though, the Chicago Board of Trade also serves an important purpose in risk transfer. And that allows people, buyers and sellers, to physically transfer that risk over to other people. So you could end up having a grain buyer who buys those bushels. He can physically go out and sell a contract on the Chicago Board of Trade. And maybe you've got a speculative trader that physically wanted to physically buy bushels, so that sell was on the other side of that. So that becomes the price discovery and the risk transfer. But as we dig deeper into what does that mean locally, it does become that price that the cash bid is based off of. And that becomes an important part of how agriculture just goes forward, Bryce.
On that note, exactly, Jeff, I've heard a lot of farmers, they tell us, hey, we don't trade in Chicago. I sell my grain when I cross the scale. Talk more about that relationship and how the local prices are following that.
Yeah, and that's exactly right. So you've got the Chicago Board of Trade price gives us that foundation. It's the futures component, but let's take a step in here and look at it. So that cash price is made up of the futures price and it's made up of the basis. Or to say that another way, the basis is the difference between the cash price and the futures price. So each day as the market's trading, that's physically giving us a price to work off of. And then as we link it back to that local basis and local cash price, that's where those regional differences come into play. And what's interesting about that basis, it varies all over the United States. Typically in the western part of the United States, typically we're under the futures price. Mm-hmm. But as you move further east and in areas where in southwest where you get further away from there's a lot of supply, you actually can see the cash price being higher than what the futures price is. And that's where we have a positive basis. So each of those individual areas, it's neat to see how they have a chance to be able to show their bids differently.
And what are some of those factors that influence basis the most? I have to think transportation costs and end users play a big factor in that.
Yeah, they really do, and I'll give you an example. So let's say we're setting up a bid. Let's say we're a local grain elevator that ships stuff out on rail. And so what I might do is I might have a customer, say in Japan, that's a miller of corn that's going to use it in their feed mill. So what ends up happening is that they're going to receive a ship from us here in the United States, so freight cost is a big part of that to go ahead and get it transported, let's say from Seattle, Washington over to Japan. But then the other part of that gets to be, as we move into the US side, it gets to be the rail freight. So rail freight comes into play. So not only the freight cost, but it's different types of freight. And then as you get down to your local area closer, then the truck freight can come into play. So it's ultimately whatever that individual in the other part of the country as a end user, someone who's going to take that physical corn, feed it to their livestock's willing to pay. You then back it off for all those different levels of freight to get it back to our local market. And then somewhere along the way, each of those steps, people have to make a profit to make that continually go forward. And so you bring all those things together, and that's what gets us to our local basis level, Bryce.
What else is important when we talk about the relationship between the Chicago Board of Trade and your local elevator? To mention, we talked about basis, but anything else that's important to talk about?
Well, I think a couple things is that, Chicago Board of Trade, what's really interesting about that is it does bring standardization, so people can use that as a way to manage the risk. Unlike as we get into those different cash contracts, well, those are not standardized. And each individual buyer gets a chance to really kind of customize and set those up the way they want to, offer different types of contracts. And what's unique about that, though, Bryce, is that then the individual farmers that are selling those bushels in there, they get to manage their risk, really, according to how they want to by the contracts that the local grain buyer offers. The quality of the grain is also very important. We know we get into different types of discount schedules, whether we've got different levels of moisture, higher or lower than that they want, and also different qualities, whether it be the weight of the grain, the test weight, or also maybe the foreign material, the amount of broken kernels and dirt and stuff that's in the grain. So those are all some things that kind of come into the cash side of it.
Now, to follow the latest market activity and find your local elevator prices, you can tune your radio dial into a rural radio network station.